Good morning, traders, and welcome to BCR's morning market analysis. First up, let's talk a bit about the US dollar. The DXY is hovering just above 98, marking its third consecutive week of decline after the Federal Reserve delivered its third rate cut of the year, totaling 75 basis points in rate cuts. While the cut was expected, the Fed's tone was less hawkish than expected. Chairman Powell stated that rate hikes are not part of the baseline outlook and that future policy decisions are likely between holding or cutting rates. Additional pressure also came from the Fed's plan to purchase T-bills to support liquidity, pushing yields lower alongside a sharp rise in jobless claims, which is the largest number in nearly 4.5 years. Technically, the dollar has entered a clear downtrend after peaking at 100.39 with a bearish double top above 100. Strong downside momentum on MACD and RSI at 35.25. Key support sits around the 98 psychological level with resistance near 98.79 and then 99.11 and 99.2. Next up, let's have a look at crude. WTI fell to a near 8-week low of 56.88, posting a weekly loss over 3%. The IEA reiterated expectations of a record supply glut with global inventories at a 4-year high. While OPEC maintained a more balanced outlook, dovish Fed signals provided short-term support, but structurally oil remains under pressure. Price action continues to show that there's selling near $60 and buying interest around the $57 mark, reflecting range-bound conditions. Despite short-term rebound potential signaled by the MACD divergence, the medium to long-term trend remains bearish, with prices trading below all the key moving averages. Next up, let's have a look at gold, our favorite, which climbed above $4,300, testing the October high of $4,353, supported by expectations of further US monetary easing. Rising jobless claims and the Fed's dovish stance reinforced expectations of an additional rate cut in 2026. The Fed's plan to buy $40 billion in short-term treasuries every month also helped cap yields and support gold. Technically, gold remains firmly bullish with moving averages aligned higher, a strong MACD golden cross, and RSI near 70, indicating that there's strong momentum with some short-term overbought risk. Support is seen around 42.64, while resistance remains focused around the $4,300 psychological level. Next up, let's have a look at the Australian dollar, which extended gains for a third straight week, supported by policy divergence as the RBA held rates at 3.6 while the Fed continued easing. Markets expect the RBA to remain on hold for longer while pricing in a further US rate cut next year. Technically, the Australian dollar remains in a clear uptrend, holding above key short-term moving averages and above the psychological 66 cent level. Momentum indicators remain supportive with MACD in a golden cross and RSI around 64 as the pair approaches resistance near 67.07. Well, that's all for today's morning market analysis. Thank you for tuning in, and I hope that you have a great trading week ahead. As always, manage your risk and happy trading.